Warren Buffett is currently no longer doing buy and hold, but rather sell and hold cash. He is selling stocks again for $6 billion. He has sold all of his S&P 500 ETFs and has increased his cash position from 50% again. What he has sold, why he is waiting for the crash, and how big it could be at Northern Finance. I'm Alex Black. Yes, I was a huge fan of Warren Buffett for a long time. He was one of my biggest role models, and I always wanted to invest in a similar way to him. But lately, yes, I've been buying more and more, and he's selling more and more. I buy here in savings plans, etc., and he keeps making more sales and is basically building up cash like crazy. That does worry me because he's not just doing it on a small scale, but as you can see in this chart, he's had more than 50% cash on his balance sheet since 2005, more than ever since shortly before the last financial crisis in 2007 and 2008, when he invested heavily. During this period, he did use that cash, but I have to say, he didn't perfectly time everything even a bit before that. And according to estimates, Berkshire's cash position has now slightly increased from the recent sales reaching 51.68%, but he doesn't have the money like Scrooge McDuck physically lying around in a money vault. Instead, it's in short-term US Treasury bonds, specifically in 3- and 6-month Treasury bonds, which can be quickly sold again. They currently offer a risk-free return of 4.32% per year or 4.37%. That's not bad, but on the other hand, it just barely keeps up with inflation, which is in fact currently reported to be at 3%. How it still pays off is beautifully described by the magazine The Globe and Mail. In the past, Buffett has advocated for building a large capital reserve to ensure Berkshire Hathaway's ability to respond quickly and decisively when opportunities arise. From this perspective, cash is a tool in the investment handbook that serves both defense and offense. From a defensive standpoint, it provides a barrier against financial uncertainty and allows the company to weather economic downturns without having to sell other assets in distress during tough times. And it goes on to say that cash indeed offers unmatched flexibility when needed. It helps Buffett seize unforeseen opportunities that require a quick response, often during stock market crashes or when unusual assets lose value. Buffett's ability to acquire significant stakes in companies at good prices without using credit depends on this flexibility. Quote end, Buffett is simply a professional investor and one of the most patient people in the stock market, in my opinion, which helps him tremendously. We all want to make as much money as possible in the shortest amount of time, but he is just long-term greedy and not short-term greedy, and that is really a significant difference. We can really take a page from his book on this quality. If we look at the chart of Berkshire's performance against the S&P 500 over the last 12 months, we can clearly see that Berkshire has made about 5% less return during this stock market rally. That would make many fund managers nervous, as they could soon be fired, but Buffett can stay calm because he invests very long term, and his investors know that. In my opinion, this also has to do with Buffett's age. Young people can't invest like this because time in the market simply beats market timing if you are not a professional investor.
I'd like to ask both of you, if you were 30 years old again and had your first million in the bank, how would you invest it, assuming you're not a full-time investor, you have another full-time job, you can cover your expenses with other savings for about 18 months?
Under the conditions you name, I'd probably have it all in a very low-cost index fund. And it'd probably be, might be Vanguard. Somebody I knew was reliable, somebody where the cost was low. And because you postulated that you're not going to become a professional investor, I would recognize the fact that I'm an amateur investor. And I would feel that unless bought during a strong bull market, which this hasn't been, I would feel that that was going to outperform to a degree bonds under current conditions over a long period of time, and then I'd forget it and go back to work.
It's in the nature of things that you aren't going to have a whole lot of screamingly successful professional investors. You've got a great horde of professionals taking croupiers' profits out of the system, most of them by pretending to be professional investors. And that is in the nature of things too. But if you don't have any rational prospects of being a very skilled professional investor, well, of course you should compromise on some simple thing like an index fund.
Yeah, and that you will not get that advice from anybody because nobody gets paid to give you that advice. And so you will have all kinds of people telling you how much better they can do for you than that.
And this is exactly where he tells you, stick with an ETF with low costs and broad diversification, such as the S&P 500 or a world index. So we can very likely not achieve a higher return than the market here. Indeed, at least if we invest in the same market. This is important when it comes to different assets, unlisted assets like private companies. It looks quite different there, and in my opinion, it's the same with cryptocurrencies. But for the stock market, that's true. So what exactly is it that Buffett has sold now? It was mainly financial assets like Bank of America, which is one of the 3 largest stocks in his portfolio. Here, he sold 14% of his shares. Capital One Financial, here he sold approximately 18%. With Citibank, he sold off the most at approximately 73%. And then there were a few other smaller sales, along with a big purchase of Domino's Pizza that came on top of that. That's all there is to it. Buffett has thus built up more than approximately $6 billion in net cash and is now waiting for the big crash with his short-term government bonds so that he and his investors can make good profits. And you can take advantage of Freedom 24, which still has their bonus promotions running with free stocks, where you can get up to $800 per share as a gift. You can also see the median values of the bonus here. It doesn't matter what you invest in. These can be ETF stocks, US Treasury bonds, or completely different. Freedom 24 is a very good broker, and I personally like using them as I get better rates for 2 to 3 euros per purchase than with a savings plan, saving me 20 to 40 euros a month. Click the link below in the video description now to secure your own bonus. And for the following 3 reasons, you shouldn't necessarily replicate Buffett's strategy in your own portfolio. First of all, Buffett was indeed born in 1930, making him a proud 94 years old. He can certainly and undoubtedly afford not to make high profits every year anymore, as he has already accomplished, achieved, and invested so much in his life. That's just a completely different position than mine or yours, where we still hopefully have most of our lives ahead of us, and that's why we indeed need to invest differently. Secondly, Buffett is a professional investor. As he himself says, private investors should in fact invest in a quite simple manner, not make it too complex, and they actually don't need fund managers who charge high fees only to end up with lower returns than the market. And thirdly, time in the market beats market timing. And we, as relatively young people, at least compared to Buffett, should use the time we still have in the market and continue to build up our snowball of wealth every month, buy more and not let ourselves be shocked by crises, but on the contrary, take bold action and continue to invest our money, as there will then be more favorable valuations. But in all honesty, Buffett most likely still sees the markets as overvalued. The Buffett indicator, named after him, still indicates that the US stock market is historically extremely overvalued. He divides the total value of US stocks by the economic strength of the USA, and this results in a ratio of approximately 211%. That's approximately about 66% more, or 2.2 standard deviations, above the historical average. This means the stock market is very overvalued relative to the economy. On the right, we see the current value, which is higher than ever before. Only briefly during COVID was it similarly high, just like during the dot-com bubble in 2000, and in both cases the value then fell sharply afterward. Interestingly, according to this indicator, the stock market wasn't as overvalued during the financial crisis in 2007, but rather it was cheaper, sitting at -1 standard deviation, which has only happened very rarely in recent history. By the way, -2 standard deviations have never been reached since 1950. I think I would invest everything I can on credit here. And yes, Buffett also sold his S&P 500 ETF. I find it very interesting, but that position was only worth approximately $48 million, which isn't very much. With a market value of approximately $270 billion for Berkshire Hathaway, it's like if you have a roughly 100,000 euro portfolio and now sell an ETF for 10 euros. Basically, you could say it doesn't really matter. So in my opinion, I wouldn't consider this the biggest crash indicator. But prices are definitely very high in the markets, and that's why Buffett is obviously waiting with further purchases and has a lot of patience. And you can invest in both US government bonds and ETFs, as well as other individual stocks worldwide with Freedom 24. The link with the bonus is under video description. I'm looking forward to hearing your thoughts on Buffett and his sales, and I wish you a good return. Until next time.